Good morning, ladies and gents. So today we're going to be going over this crypto bullish bias. You can see here on the Discord on the 28th of July, I shared this bullish bias for Ethereum that I think that the buy side liquidity expansion is next on the weekly. On the higher time frame, expansion is coming. So let's look as to why that is the case. Why did I expect that? So just very quickly, the basics of advanced liquidity is we look for areas of support and resistance, and the swing lows and highs above and below those areas will be our areas where we will focus on for liquidity. So essentially it will be something like this. Price is climbing up, forming a nice area of support. It breaks that, bearish market structure shift, resistance, swing high. So that is going to be our target for liquidity, because we argue that as price comes up, we anticipate traders to short the bearish market structure shift and short the resistance, and they put their stop loss at the swing high above the resistance. And we argue that the majority of traders are losing traders, so the people who take this basic pattern into consideration will most likely get stopped out. So as soon as it hits the gray box, we are looking for longs, because at this time people are entering shorts. So as the masses enter short, you enter long. But sometimes you need to wait a bit. You need to have a understanding of context and of time, because this is possible for price to do this, give you a nice fake reaction. It can even do it again and just wick above, keep all the bodies in the support, so it still looks bearish. And then after the accumulation and maybe the right time, then it can go. So I will talk about time. Maybe I think time will stay in the Discord. We won't be talking about time on the public YouTube channel. Anyway, let's move on. So this is the basic setup for A plus setup. A bearish market structure shift and price returning back to resistance, and a bonus confluence. On the higher time frame, the order flow is bullish. So this is the perfect setup for taking longs. So let's look at Ethereum, what was present on Ethereum. So we can see, if you turn on the line chart, there's a clear area here, a support and resistance area. So if you mark out the box, you mark out the swing high above it. So this, but you can also argue that this is buy side liquidity, because on the monthly chart it will be the same. There was 1, 2, 3 touches here with the wick, and the swing high above it will be there. So it's possible we take out all-time highs, but I prefer to take only high probability trades and focus on low-hanging fruit. So I am happy with that target right there. So let's mark that out as the buy side liquidity. So here we have price coming into resistance, bearish market structure shift, order flow is still bullish, and that is our A plus setup. So you don't need to long here, you don't need to long anywhere here. You can go down to lower time frames. You can argue that maybe price wants to come back up to this resistance and then take this liquidity. So you can look for longs here on the lower time frame, but it's not something that I like to do. Like I said, I focus on high probability setup. So as soon as we traded back into this resistance after this bearish market structure shift, and we gave this reaction here, that is a high probability long, because we entered into this resistance again and they made it look like price is reacting bearish from it. So if we look on the daily, we hit the resistance, another bearish market structure shift on the daily. So they're making it look bearish, but we know the drawn liquidity is bullish, the order flow is bullish, the trap was already set because we did have the bearish market structure. So expansion is underway, so we're not that scared of deep pullbacks. We are looking for expansion towards the stop losses of the people who entered short. Okay, they can't give these people too much of a down move, because then they can start taking TPs, move stop loss to break even, all that. So the move for the stop loss needs to happen quick. So that was the setup for a bullish bias. And at the same time, if we look at Bitcoin at the time that Ethereum had that bias, had a similar scenario on Bitcoin where we had, it's more clean on the daily, resistance, bearish market structure shift, and we take out the swing above it. Even at this time, we could have still argued that price wants to continue expansion. If we go on the weekly, how does it look? Not that, but like this, we did take out this liquidity, but the body is still closed below, and it is an all-time high expansion. So when you see this, you could expect that it's still bullish, because this might still look bearish, because they will say it rejected this support and it took the liquidity, but there's still more swing high liquidity if we take into consideration that Ethereum is also still expanding towards all-time highs basically. So it took out that liquidity target also, but my main focus will be to take out that pool of liquidity. So it was around the 2nd of August when they made these lows, and that was the bearish market structure shift on both of the charts, and they both had a setup already on top for advanced liquidity, buy side liquidity, and you were simply following the order flow and creating your idea around that. So let's just go over it again. Area of resistance, swing high above it, bearish market structure shift, and that is the recipe for a plus setup. Bearish market structure shift into resistance while the order flow is bullish. I hope you guys enjoyed that one, and cheers.